Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on XLK Apple in Facebook. So the tech sector had a rebound today, and we have inside bars all over the place on the daily time frame. Some of them closed stronger than others, with odds favoring a bull break, some favored a bear break. Google and Netflix stood out as weak closes. We have the sector as a whole closing pretty strong. So the high to break is 64.01 to see continuation of the bounce. And if we see a break of 63.33, that will lose the higher low pattern on the hourly time frame, and we will be fading back to the low of yesterday, 62.84. So with a bull break, we're really just looking back up at the all-time high. With the end of the month, we had a little bit of window dressing today, a little bit of fun shuffling around, clearly yesterday and again today, but some money was coming back into the tech sector, and we'll see if it's going to be enough to head back to all-time highs. The weekly time frame still extremely very strong, holding above the exponential supports as we have been for months and months. At this point, the last time we closed over or below the 8-period exponential was back in July. So we're continuing to show strength, long lower wick. If we have a green day tomorrow, it's going to be a significant lower wick, showing the bulls buying the dip, and a nice recovery. Look at Apple leading the way on the recovery today. If you look at the hourly time frame and compare all these names, all these tech names together, Apple was the strongest bounce yesterday because it formed an hourly higher low and higher high. The vast majority of the names did not get that higher high yet, and so they weren't as strong. So Apple led the way today after a quick flush first thing, a little bit of a fake out. The bulls turned around in a V-shaped recovery, and you can see we closed near the high of the day. So if we get a bull break of this inside bar at 172.14, we are looking for continuation back up above the middle Bollinger Band. That will be the goal for the bulls to close over tomorrow. And a bear break would occur at 168.44, a lot less likely, but certainly still a possibility to be keeping an eye out for. Weekly time for Apple, also holding exponential support, also remaining very strong. No red flags. We'll see where that inside bar breaks on both XLK and Apple. And Facebook, you can see not as strong a bounce. We had a significant dump day yesterday. We only made back about half of that at the high of today. Resistance for the inside bar is 178.28. Support is 175.20. We'll see which breaks first. If we break the low, we look at the low of yesterday. If we break the high, we look at the middle Bollinger Band resistance. So the setup is very similar on a lot of these tech names, and it's the inside bars that we're all watching. The weekly time frame for Facebook, upper Bollinger Band resistance is containing the price to a degree, and the middle Bollinger Band support is approaching. So we're getting very tight between the middle Bollinger Band and the upper Bollinger Band, and that's going to be some key levels to be watching to the end of the year here over the next 4 weeks to see if we lose the middle Bollinger Band or if the upper Bollinger Band levels out and begins ascending again to create further room for appreciation of price. So that's where we stand in the tech sector. Nice recovery by the bulls. No panic, no fear, just a flush. And that flush was not based on news, and there was no real attempt by the media to spin news on it. So that, in my opinion, in an extremely bull market is something that, you know, the general herd is going to be able to disregard to a degree. Whereas if the media is spinning a reason for things, you know, this is the reason that there's fear, that can almost cause the herd to latch onto it a little bit more and say, oh, maybe this is something real. But, you know, if it's just a big drop out of nowhere, no real validity and doesn't really resonate with people who are not watching charts. So I appreciate you watching. We'll check back in over the weekend. Hope you have a good Friday.